So these are things like calculus. Engage, so they don't go away.
Yeah, no, I really don't. Oh, then I'll speak up more.
Yeah. She's very.
Um,
And I would have regional reach out to the ones that show it, you both get the offer.
yeah.
Remember,
And there's a couple of insurance. Exactly, that was having their stuff in town on Friday. So yeah, so it's just like, so
I don't even get the
all day.
I just like it, cause then there's a bunch of ding, 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 and I'm like,
and so I'm like.
go fix a road.
I told you I had to get out of my brain.
So, you know, it's been research and this. I don't want this, so then I started, and then like strong coaching, and then I saw and then I was like, yeah. Henry's just, you know, who knows what he's doing. Yeah, yeah. So I was like, oh. Yeah. Mhm. I was like, what a joy. Love it. Yeah. Oh, I need it. Heard that. Stop too.
Yeah, that's right.
Yeah.
Felt it.
Yeah.
Nice.
First.
It's called for you.
Yeah, so, they were.
All right, we'll get started here this evening. Julie, if you can, notice a roll.
Will do.
And if you're able, please join us in saying with the pledge of allegiance. I pledge allegiance to the flag
Of the United States of America, and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
I know. All right, workshop have this evening, we always do an open forum as well, so if anyone's here and wants to come speak to council, it's real informal, you can sit right there, or if you're interested, or stand right there, limit yours to a couple minutes and state your name and address for the.
Or wherever you want. Many of you know me, some of you don't. My name is Pat Heverland. I'm a leaseholder out of the airport. And I'm here representing many of the ground leaseholders at the airport. Just because they're not here, they've all read this, they all agree. I'm just the one that volunteered to come speak to y'all tonight. And I wrote it all down because I am representing many of us, so I want to make sure I get my statement accurate. I'm here today to express our shared frustration over the nearly 14% increase to our leases and the liberties taken by the city of Forest Lake to justify that increase. And before I begin, I want to thank Ellie and Jolene for meeting with John Schmidt and myself. They were professional, respectful, and took the time to answer our questions, and genuinely appreciate their willingness to meet with us and explain the city's position. So I thank you for that. After reviewing the city's explanation, I understand how the new lease rate was calculated. While we disagree with the interpretation of that increase in our lease, that is not what concerns us the most, is not the dollar amount. Okay. What does concern us is the precedent it sets. The city has chosen to look all the way back to 2009 and recover CPI increases that were never charged to leaseholders. Whether that interpretation is correct or not, it raises an important question. If the city can go back and apply increases that were never implemented, what prevents a future administration from doing the same thing? That uncertainty matters to every leaseholder. My second concern is the process. When it involves, when the invoices were mailed out, sorry, I forgot my cheaters. I printed it big too. when the invoices were mailed out, they simply showed a nearly 14% increase. There was no letter, no explanation, no indication that the city had adopted some new, completely different method of calculating a lease rate. Most leaseholders expected an increase of around 2.5% based on the recent CPI. Instead, they received an invoice for a much larger increase and were left wondering what happened. What's even more concerning is that the city council chose to move forward with this new interpretation despite the recommendations of the airport commission. The airport commission exists to provide expertise and advice on airport matters, yet its recommendation was expressly set aside. Decisions like this deserve a clear explanation, especially when they directly affect the people who lease property from the city. What also concerns us is the broader principle this establishes. I have to ask, is it now the position of the mayor and the city council that future councils can now revisit effectively overturn decisions made by previous councils in past years? Because that's essentially what's happened here. Previous city councils chose to adjust lease rates by the amounts that they did based on circumstances that existed at that time. I was in some of those city council meetings and airport commission meetings when the lease rates were talked about. I was there. Circumstances that none of us can fully know or appreciate today. Those decisions were made under different leadership at a different context. By going back and applying increases that were never imposed, the city council is effectively replacing those past decisions with its own interpretation years later. If that is now the city's approach, then every long-term agreement with the city carries a level of uncertainty that should concern everyone who does business with Forest Lake. That isn't the level of transparency we should expect from our local government. Had the city simply included a letter explaining that it was changing the interpretation of the lease and why the increases were significantly higher than expected, much of the confusion and frustration could have been avoided. I expect the city to follow the lease as written, communicate openly with when significant changes are made, and to be transparent in its dealings with the people who do business with City of Forest Lake. So we may choose not to challenge this increase, and when we say challenge with court or legal action, we may not choose to challenge this increase this time, but that should not be interpreted as our agreement with the city's interpretation or as acceptance of a similar action in the future. We will continue to pay attention, ask questions, and if necessary, defend our contractual rights another day. Thank you for your time.
Thank you.
And I'm willing to answer questions. I don't, it's more informal than a city council meeting, but
It is, and I suspect part of the reason why you're here is what the explanation from staff didn't sit well with you. So that's why you're here.
well, there is a precedent set for house rates, release rates increases are calculated. Okay, and that was not followed this year. And I understand that they're trying to raise more money, but there is a formula for figuring out what how much lease rates can go up. And that wasn't adhered to.
My understanding, that's one way you could figure that out, correct?
You know,
That's what
lawyers are really good
contracts
at
say,
interpreting.
is that what the contracts say? That's one way to determine,
It's,
one way.
so the other problem is we have 3 or 4 leases out there.
That is a problem.
So in the past, this has been talked about and acknowledged, and you probably weren't around. Mara Bain was around when they tried to do this once before with the $280. Okay, for the runway paving project.
I think this is different. I'd argue this is different.
Well, it isn't because they called that rent. They specifically called the $280 rent. Again, I was there for all of that. I owned the airport hangar lease at the time. I was involved in all of that. We were involved in an argument with the city. I was there. They specifically called it rent. And we fought it for 3 years. We paid it and fought it for 3 years, and we were victorious over time when city council and people changed over. Because it wasn't right. Okay? And we couldn't get them to put anything in writing. They just kept sending us an invoice for $280. Just none of it was right. And they called that rent. And that's exactly what you guys are doing here. Now, it's hard to argue that the dollar amount that it went up isn't reasonable. It is. It's a small amount of money. But it's not when you calculate it over 20 years and every percentage increase on top of that in future years is compounded by this amount. So it's hard to argue that $1 amount is unreasonable. But it is, you can argue that the compounding factor of that over many years is an unreasonable increase. And so many of us, many people didn't even notice it. I almost didn't notice it. But I thought to myself, that seems a little high. So I pulled out my invoice from last year and did the math. I'm like, So then I started making phone calls. And they're like, yeah, that's not what that's not what the airport commission recommended. In fact, what they recommended was even above what should have been allowed. And you went way above that. So everybody's going, what the hell? And many people, like I said, the dollar amount itself is relatively insignificant
Keep that in mind.
for 1 year.
Relatively insignificant.
For 1 year.
Yes. Relatively insignificant.
For 1 year. I'm not gonna argue it's not. And that's why there's not more pushback. But what says that next year you can't say that $1,000 more is reasonable or $10,000 more is reasonable? And you say, well, that wouldn't be reasonable. Would it? Wouldn't it? This is setting a precedent that you can basically do whatever you want and call it reasonable. Well, that's why we have precedent set in the past of how the rates were calculated.
I would guess our attorney would have a different perspective on that.
You can, you know what, attorneys can argue 16 ways.
I'm just telling you what our-
It,
Decision, a lot of decision was made here, at least me personally, what our attorney advises to. So that's what the decision was made. So I'm open to a
and
phone
what's
call.
the city attorney's job? What is the job? It's not to
Protect the
protect this taxpayer.
Yeah, yes, it is. The
It's
city
to
and the
protect the
taxpayers,
city.
who are the taxpayers. So, no, I'm.
Remember that at the airport, we have a mayor of a different city. We have the chairman of the finance committee of the Minnesota Airport Commission. That's a leaseholder. We have some pretty freaking smart people out there that do aviation all the freaking time. And I can tell you, they're pissed.
Haven't given my number.
Yeah.
Haven't given my number.
The problem is, nobody's gonna fight over $100.
Let's have a
And
conversation.
that's-
Let's have the
Well, we
conversation.
should have had a conversation before they sent
It
out
was
leases,
public in an airport commission meeting.
which.
Did
there
you
was a
not review that?
recommendation.
Did you
There
not
was-
review that, Pat?
Yeah.
Apparently you didn't.
No, I did.
Okay,
I watched it. There was a recommendation made. What happened to that recommendation?
recommending body. That's what they are.
Recommended.
They are a recommending
Yeah,
body.
Yep. But what happened to that recommendation?
There's nothing saying that we have to go with any of the boards of commission recommend to us.
Right, so going to the meeting wouldn't have mattered. Because the city council did not take that and use it for anything. So going to the meeting wouldn't have mattered. I've been to many. I've been to 100 airport commission meetings, city council meetings. I've been doing this for a long time, okay? Again, I'm gonna reiterate, it's not about the dollar amount, it's about the precedent that it sets. So what happens when all of the ag land that we get lease money from to help support the airport is gone? Because the city has given it all away, sold it all, or whatever they do with it. And now we're short $100,000 for our budget for the year. And now you come to us and say, everybody's gotta kick in 10 grand. That is not a reasonable situation. So long-term planning has to happen here. People forget that all of the land where the Y and the library and the government building and all of that was airport property. What happened to all the money that came from that is gone. Some of that should have been put into a fund for the airport. That all came from the airport deal. And that was way before you.
Yeah.
It was way before any of it.
Any of us.
My point is, there's no long-term planning to replace the revenue stream that was in place. The airport operated in the black for years.
Yes, okay, we're gonna end this right now, and again,
No,
please give me a call. Please give me a call.
I know this is more informal than.
The transparency has come up tenfold.
Mhm.
We are billing staff time, we're billing legal to the airport fund, not to the taxpayers. So I would argue that there's more transparency going on now than there ever has.
And that might be true. I can't argue with that.
Just,
But-
Pat, give me a call. and I'm-
Long-term planning for the financial stability of the airport is what we're not seeing. Okay, and when I say that, I'm saying, how are we gonna replace revenue streams? You can't come to the leaseholders for the revenue all the time. At
Do
some
you
point,
realize this council, actually, this project's going out there, use levy dollar money to pay that, so. This is a very supportive,
hold on, hold on. To pay for what?
the project going out there,
Okay.
10% of it, 10% of it, that money that we didn't have in that fund.
None of us cared that that runway project happened. Nobody asked us. No, there was a whole bunch of us that went, the city can't, if it can't.
Why is
be
this the
paid,
first time I or any of us are hearing from you, if you're upset? We would have likely saved the money, but no one came to us. What we've been told is that extension, that extra 300 feet is huge, it's safety and all the rest of that. But guess what this
That's
council did?
100%
We
accurate.
spent the money on it.
Yep.
But yet we're always getting pushed back. You're not supporting the airport enough. You're not doing this, you're not doing that, and that is bullshit, to be honest.
Well, the airport leaseholders rent a piece of ground. We do not rent the airport. Okay,
That's understood. That's understood.
but I don't know that it actually is. Because coming to us to finance the runway extension is not what we rent.
That's not why,
Rent-
that's not why this went up. That is not why to finance that project.
But
That is not.
we can, I'm happy to have a conversation about this anytime. All right? There's many of us that are of like mind, that have like opinions, okay? People don't like conflict. I don't like conflict. But I raised my hand and said, I will go to the city council meeting and I will speak. Because people don't want to get up in front of people and speak. And it's hard for me. I don't mind. Okay? So saying, why don't 15 people show up and speak?
I didn't say that. I didn't say that.
I'm making up, but to say that people don't want to come and speak in front of things, they don't. So it's very difficult to sit here and say, why aren't all these people coming and telling us? Well, people don't. fight.
If I had to really put a time on every component of the city that I've spent almost 4 years. It's a lot of airport, and people have been very open to reach out to me and give their opinion, which I appreciate. I want to hear that.
Some of the people who have reached out, taken up a lot of your time are not like-minded of us. I
Okay.
don't recognize, I do not represent those people. A couple of those people specifically, that I'm not gonna name names, we are not of like mind. I'm talking about other.
Okay.
I can
The vast
appreciate
majority.
you coming here and being a spokesperson. And if those folks don't wanna be the chatty part of it, but if they wanna come up here as far as numbers and just voice their opinion to you, and you can be their spokesperson. That way they hear what's going on. If they agree with it, disagree with it, or they have their opinion,
And we
then they
talk,
can put it through you.
and we
And
talk
everybody
about that.
everybody gets their point.
Yeah,
So,
so it would be nice if people could show up.
yeah, that'd be awesome. That'd be awesome.
Well, and again, guys, this is not about the hard ones, it's not. It's about setting a precedent for the future. And also, we'd like to see some out of the box thinking and some out of the box ideas for funding the airport, rather than coming to the leaseholders, because there will, if you guys come next year and say it's gonna be $1,500 or $2,000 or something, you're gonna have a fight on your hands. I know that for a fact. So there's gotta be a different solution. You can't just come to us every time there's more money for the airport. That's not how the leaseholders work, the lease works. So.
I think that the comment every time is disingenuous. Every
Which
time,
one?
the comment that you're gonna come to you every time there's a money for need,
Yeah.
disingenuous. I think one of their, after
I'm talking about this
2017, 18, maybe it happened because of an overrun at the airport. When else has the city come to the hangar owners looking for money?
Well, that was a different, okay, so. I
So,
don't
and we don't
wanna
have
go on
time
here.
tonight,
I don't
you know,
wanna-
we can
but
have-
the $280 thing was a whole. Pardon my language, shit show that thing that happened, should have never happened. But it's an example of how they called it rent. And then here we are.
Thanks for coming
All
out
right,
tonight.
well, thanks, guys.
Thank you for your time.
All right,
Eugene, like speaking.
Eugene, come on up.
Wants to stay. I was around. I've been around for a long time, in 2000, when the city was taken over. I wasn't with Dick Cheetah. But I know, and he explained to me how he gave the $1 million plus check to the DuPont. And that's how it started. But there was never said anything about expanding the runway. There was nothing about expanding the airport as the way it was. This is, of course, the township, which is much more conservative than the city probably ever would be. But it was supposed to be, there was airport land, but there was land beyond it that was also bought, but wasn't used for the airport, which is now Fenway, the hockey, the other. So the question is, where's the money? Would you know where the other $1 million went to? To buy the nursery. So that they could expand the airport and have that runway at a certain angle, so that, you know, you couldn't. And we were told that was a really good deal. Taxpayers paid for that. And at the beginning, now I can't say, because I haven't checked so much on, I appreciate that he comes and talks, because everything is going on. I understand that. But I appreciate that you're trying to protect the taxpayers. But at the beginning, what a deal. I think it was 200, 300, you have to look back, $800 a year to lease out there. Now they had to pay for they were getting a good deal on stuff. So the taxpayer all along has gone the route of supporting the airport. And he thinks his people are upset. Let me tell you, and they don't do this, the people I know are upset, but they don't come either and voice their opinion. But I do like you standing up for it. Next year, don't put it up 14%, but you know. And same with the taxes.
All right, thanks, Eugene. All right, we'll go into the 2027 budget discussion. First one, investment portfolio presentation, and I don't know if someone's gonna kick this off, or Ellie.
Yeah, so at previous workshops, the council asked for our investment team to come in and speak a little bit about our portfolio and what those investment accounts are made up of and what policies we have associated to it. And so we have two of our investment support team from PTMA who are here to talk. And so just a little bit of a reminder, we have our investment accounts, and then we have our PMA account, which is operating as a bank account, which is a little bit more liquid than our investment accounts, and we get better interest rates on it than we would do at a standard bank. And then we have our standard bank that we take a lot of our day-to-day operation cash flow out of.
Perfect.
Welcome.
Thank you very much for coming. Appreciate the opportunity to come out. So myself, Corey Boyer, and Ben Norton with PTMA. As Ellie mentioned, we kind of work with different buckets of money, and we'll kind of get into that a little bit, talk about how the dollars are currently placed and the different ways that these dollars are being managed. By way of background a little bit, PTMA, for those of you who don't know, we are the administrator and investment advisor for the League of Minnesota Cities 4M Fund program. And so that's how a lot of cities are familiar with us through our work with the League, with the 4M Fund. And so I know Ellie mentioned that, kind of being that shorter term bucket that we're working with cities across the state, helping manage those dollars. So we'll kind of talk about how we are utilizing the 4M Fund program, as well as then some of the longer term managed dollars that we're working with the city on. Before we get into the portfolio, I just want to spend a little bit of time. Ben and I will kind of cover different pieces regarding the, I guess, the market dynamics that we're working with right now. I know Mayor mentioned that So we were fairly new to council. It's always good to review kind of these statutes because statute 118A, if you haven't read it, I would encourage it. But it basically tells you what cities are allowed to invest in. And so 118A is a very conservative statute. So I always say if you're comparing us to your 401k statement, especially this past year, we will not compete very well with your 401k. But it is conservative for a good reason, and that's because safety of public money is the primary objective for every city we work with. So the statute that we are working within with the 4M fund is that same statute that you as a city have to work within. And so you can kind of see the different types of securities that cities are allowed to invest in, treasuries, agencies, municipal bonds, different types of investments that really can limit the credit risk in a portfolio. And so when we look at credit risk, it's really difficult to add a lot of credit risk to a public funds portfolio in Minnesota because that statute is that conservative. We'll get into some of the different holdings that you have in your portfolio, so you'll see some of these investment types in the portfolio. But as you look at this credit risk spectrum, as we call it, treasuries being the lowest risk, you can go out and invest in commercial paper as a city. But even there with commercial paper, municipal bonds, there's credit rating restrictions on those types of securities. So you can't invest in any type of CP or commercial paper issuer. It has to be the highest rated. So even as you get riskier side of the spectrum, a lot of that risk is really removed by statute. So again, it's a very low risk portfolio that we're working with. But at the same time, we're still trying to maximize yield as best we can. And so that's where we kind of get into some of the discussion that we'll get into. So that's kind of a legal framework that we're working within with public funds in Minnesota. I'm gonna have Ben kind of get into kind of the market dynamics that we're seeing right now before we get into kind of review of your portfolio.
Thanks, Corey. Good evening, everyone. Just as a note on staffing, you may have met Kendra Schelling before. She's out on maternity leave, so I'm just covering for her. And at the next meeting, you'll likely have Kendra back. So I just don't want you to feel like the coverage on your account is shifting at all. This was all pre-planned. So I'll cover just some of our high-level thoughts on the macro environment that we're in. There's one takeaway. We'll kind of build up to how we got here, but rates have moved up substantially this year. So interest rates have moved higher on almost all products. And then that has twofold impacts on the portfolio. But a lot of what we would pay attention to or really try to focus in on is the inputs to the Federal Reserve's decision-making process. So here we have the unemployment picture, and from this half of the mandate, it's relatively strong. So this shows an unemployment rate of 4.3% as of May. In June, that ticked down to 4.2%, and by all accounts, that's a strong indication of a healthy labor market. If individuals need a job, they're able to secure that relatively in straightforward manner. So the labor half of their mandate is in a really strong position. And if we look at the next slide, we're looking at the inflation half. So the Federal Reserve is always balancing this dual mandate of price stability and full employment. And the price stability half or the inflation half has been far more challenging over the past several years. We all are familiar with the major inflationary cycle we went through related to the COVID-19 pandemic. We've made great progress since those high single-digit inflation measures, but we're still above the Fed's bright line of 2%. They want to return inflation to 2%, and they've indicated they are very committed to doing that. And when the Fed takes actions to limit inflation, they would typically raise rates. So they've messaged that they're committed to doing this. There's a Federal Reserve meeting here at the end of the month. We're expecting them to be on pause, but the market is more and more moving to consensus that the next move would likely be an increase, and that's shifted the whole rate complex higher. We can see that on the next slide here. So this is a number of yield curves. I apologize, it's a little hard to see on the screen when they're this tight, but in general, the green line is a year ago. The light blue line at the bottom is from April, and then the darker blue line just above that is from the beginning of July. And the takeaway here is, like I said, the rates have moved higher. So we're in a renormalized yield environment. Longer term yields are higher than short term yields. This was a number of years we were inverted Yes, so the Fed was moving lower, but we've re-steepened at this point, so you're getting paid to be out the curve. Definitely a tailwind for your 1 to 5 year portfolio, but those moves higher in rate, put some downward pressure on the prices of the securities held in the portfolio, which can limit short-term returns. Then we can flip to the rate slide. So this again is showing really the same story. You can see those the darker blue lines have moved up substantially over the past few years, and even just at the far right end of the chart, you can see they moved higher. So that's the 2-year and the 10-year treasury note moving higher. And then the OAS here, the investment grade line, is showing how tight spreads are. That's an indication of how well capital markets are functioning right now. Corporate borrowers are able to come to market and borrow at attractive rates if necessary. And definitely that is a benefit to the stable now and 4M portfolio that you participate in, is getting that some of that corporate exposure at the shorter end of the curve. And we have our outlook slide here. We include this, or it's always a reference. I think I covered most of these points, but the major takeaway here is that rates have moved higher. The Fed has indicated they will likely raise rates. Well, that would be their next move. But a lot of the other fundamentals that we're seeing across the economy through corporate earnings and the labor market are constructive and really indicating positive overall health of the broader economy. And I would pause if we have any questions on what's happening to.
Nothing yet. So we'll kind of get into the portfolio now, and I think it's helpful just to kind of get a general idea of where the market is, because especially now with budget season coming up, this gives you as you look at kind of where rates are at, where they're projected to be, and we'll talk about kind of the shorter term, the 4M short-term rates. That really kind of paints a picture of what the expectations should be as you look ahead to the next year. As well as you're having your budget discussions, this type of information can be helpful as you're setting some of those 2027 revenue numbers. So as we get into the portfolio, just briefly, a lot of our discussion with cities is really more around cash flow needs. Because depending on cash flow need, that's really going to drive, where the dollars make sense to invest. There's different programs, different investment types that are better geared for short-term versus long-term. So as we work with communities across the state, this is really kind of the primary discussion we have with them is when do you need these dollars? What's your cash flow look like over the next number of years? From those discussions, then we can come back and make better recommendation as to where maybe some dollars should be placed. And so as we look at these different buckets, short-term, intermediate, long-term, you can kind of see, we might look at a multi-class or a money market program on the short end, all the way out to on the long end, like the city here, we've got the long-term managed portfolio. So you've got these dollars divvied up, invested differently into each of these buckets. So this this was as of the end of June. And so obviously we have one big number at the end that kind of skews this whole chart. But as of the end of June, which for a lot of cities, it's kind of the low point from a operating kind of reserve standpoint, because that first half tax settlement probably hasn't come in yet. I think it just came in beginning of July. So this shows where we were at. So on the short end, and this is kind of a combination again of the different buckets that we're working on the left-hand side, you've got the 4M multi-class, which is our money market program. As of the end of June, was just over $1 million. The LTD fund, we had pulled some money out of that program. We'll talk about that more in a little bit. It actually doesn't show up on the chart. I think there was like $38,000 remaining in that. We'll talk about how that's structured or what that program is for. We do also have some 4M fixed rate investments we'll talk about. There was a little over $1.5 million there. And then you've got your long-term managed portfolio, and that is, as of the end of June, was around $20 million. So we'll talk about performance, what that looks like.
So long-term managed portfolio, you're still talking about those 118 asset classes.
Yes.
Correct?
Yeah.
When you're looking long term, is that based on the duration, or what's the?
Yeah, we manage it against a 1 to 5 year benchmark. So we're looking at securities generally in that range. And the duration on the portfolio is around 2.4. So that's the
It's all like short-term money.
Yeah. And that's, so when we started working with the city back in 2019, we had that discussion on the front end about what benchmark makes the most sense. And kind of establish a benchmark, however you want, to kind of compare it. So as we look more at the portfolio, if it would make sense to look more of a 1 to 10, whatever, we can always adjust that and change how that change, once you change that mandate, well, then we change how that you manage that portfolio. We manage right now to the 1 to 5, is kind of our benchmark that we're carrying against.
Is that, is the assumption that that money is planned to be used within that 5-year timeframe? Is that kind of the working thought process?
The money's not necessarily targeted for use. That would be more of an internal kind of council and staff discussion with your CIP and kind of that budget process, right? So the monies we're managing there, when we first worked with the city, we kind of looked at cash flow needs, determined kind of the amount at that time that looked like was not going to be needed, at least for the next 3 to 5 years. Okay, so that's kind of what we separate out into a managed long-term bucket. Everything else is managed through these other programs. Doesn't mean you couldn't pull some of the liquidity need came up, but at this point, that's kind of those long-term reserves that have just been managed by the team. Now, as CIP needs change or what have you, we can revisit that. But right now, the cash flow forecast that we had developed on the front end and showed that those would be fine.
Thanks.
So can I just follow on? So,
Yeah.
we because this is the first time for almost 4 years talking through any of this stuff. We've not made any policy changes on how we're doing this managed since you started in 2017, 19.
Yeah.
What do most cities do? Do they review that annually or is it not that frequent?
I don't think it's that frequent that they change a benchmark. If you're looking at going longer with a portfolio, something like that, that would be driven by discussion around, again, that long-term plan, whatever the long-term plan is. If you're saying, we've got some stable core reserves that we don't need, maybe it's showing you've got a large project 5, 6, 7 years down the road, something that is on the horizon. We can always shift the benchmark. That can certainly be a discussion point. I would say the majority of cities that I've seen that we work with, and maybe Ben can weigh in here too, but 1 to 5 is a pretty standard benchmark for a Minnesota city. But does not mean you have to follow that. If you wanted to push out longer, try to gain some yield by going a little longer, we can certainly look at that as well.
Right, 1 to 5 years are our most popular benchmark for this type of portfolio. And extending duration is a two-sided decision. So at an upward sloping yield curve, you'd expect to get paid more with a longer portfolio, pushing out to that 3.5 or 4.5 year duration that you'd see in a 1 to 10 year. That's balanced against, you're going to be more subject to interest rate risk, and as rates move, the value of your portfolio is going to be more volatile. So this 1 to 5 year tends to be where a lot of our municipal clients land.
And you're saying how much is in that account?
20 million about as of June. Yeah. That's comprised of all funds, so you've got your water and sewer fund, general funds, all those longer term reserves that are kind of comprised of all those funds are managed in that one.
When was the last time these were renewed? So what is the term date on these, if we want to make changes with any of these accounts? Or is there a penalty to make early changes?
No real penalties, the multi-class fund, which when we look short term, and we'll talk more about this in a little bit, the multi-class fund is more just liquid dollars. It's kind of a secondary liquidity source for the city that is linked to your local bank. So between the bank balance and the multi-class fund, that balance is constantly moving. It's basically there to fund your operations. So obviously there's monthly costs that you're paying, so that's going to change quite often. The LTD fund, the limited term duration, that we'll talk about, that one's less liquid. It's intended more for those intermediate, like 1 year or longer type of dollars, just a place for a little added yield, still with monthly access to that.
Okay.
And the fixed rate investments that we'll talk about, those are just fixed rate CDs that we have purchased for the city.
That's the foreign one or not?
Pardon me?
Is that the foreign one?
No, they are within the Forum umbrella, but they are actually CDs that we have invested into various banks. Yeah. And then the management account, obviously that's longer term in nature, so you've got longer security, so there would be less turnover in that because maturities aren't happening as regularly.
Yeah.
But it's.
What is the maturity date on it currently?
It doesn't really have a maturity date per se, it's just a managed portfolio, so it's like a mutual fund concept. So it's just underlying securities that we're constantly, the team is constantly managing and reinvesting.
So basically, since 2019, that's what's been happening.
Yeah.
Okay,
Yeah.
thank you.
All the questions, I think, I'm understanding where these different buckets are, it's helpful. Just to get into a little bit of detail about the programs, the multi-class fund, as I mentioned, just basically a money market program, so within the 4M fund. This is a very popularly used program for 4M participants. This is linked up to your local bank, so there's an online portal, Ellie can go in and move dollars as she needs back and forth from the bank to 4M or from 4M to the bank. So again, the goal here is simply we want to try to maximize returns with those short-term dollars as best we can until you need them to fund payroll or whatever your operating costs are. So we got that set up. The limited term duration fund we talked about, that program is for longer duration and longer exposure. It's still a pooled program, so you're pooling your money with other participants. But it's a way to get a little longer exposure. Main difference there is it's a floating NAV fund, so you buy in at the share, so it's like a bond mutual fund. That concept, you buy in at a share price, fund grows, and you still have monthly access to it if you need to, but we do recommend probably a year or longer if possible to keep your dollars there to give that time to grow. But then you do have the ability to take out on a monthly basis at that higher share price. So both programs have been effective over the last year. This kind of shows performance data on the multi-class fund or money market program. I won't get into a lot of detail on the two different lines. They're very similar in nature. There's just a couple different differences between the two. But right now, those are really hovered about at 3.6 for the year. And you know, Ben talked about the Fed and some of the dynamics that happen with them. This fund follows very closely with the Fed. So when you hear about the Fed cutting rates, if they cut 25 basis points, you'll see this fund come down. So that's why we have seen it come down as the Fed was lowering rates through 2025. It has leveled off at about 3.6 now in the last 6 months. So again, this is where we have some of your operating dollars earning that rate until you need to pull them back to the local bank. Then the LTD, limited term duration fund, again, it's got that variable NAV. So this kind of shows growth in that share price over the last year. So the city first put money into this back in June of 25. And it has grown over the year to, you can kind of see that NAV as of 6/30 of 26. And so if you kind of annualize that, it's about a 3.9% return on this fund over the last year. City to pull some money out for cash flow purposes this past year, which is kind of what it's intended for, to kind of have that access if needed. But as of July 14th, we have the net market yield is about 369. So they're all kind of in that 3.50 to 4% range as we look at some of these different investment types right now. And going back to what Ben showed, it's a pretty flat yield right now, similar rates. Then the fixed rate program I talked about too. So under that 4M umbrella, the city can purchase individual investments. We tend to keep these more short-term, long-term managed portfolios, kind of handling that long-term bucket. But this is just a way to take some of these dollars that maybe you don't need for the next 12 to 18 months and lock in some rate on those dollars. So we did work with the city to get some CDs invested. It shows kind of maturity distribution on the right-hand side where you just kind of got it laddered out over the next 18 months. Rate on these is about 3.88. So these are all locked in. As they mature, then we'll work with the city to say, do we need to reinvest these dollars? Do we need to keep them in the multi-class liquid for a project? We kind of have those discussions as those maturities happen. So it's just another tool to kind of try to lock in some of these yields. So those are the main 4M fund programs, the multi-class, the LTD, fixed rate programs. All of these are being used in different ways for the city. Like I said, I know the second half or the first half tax settlement did just come in, and I think some dollars came back into the multi-class fund from that. And then as those dollars get spent down until December, which is your next tax settlement payment, that multi-class will just serve as that liquidity source. And that leads us to the long-term portfolio, and I will let Ben kind of go through this one.
So as Corey mentioned, the long-term portfolio, the way this is actually structured is as a separately managed account. So the city owns all of the underlying securities that we manage on a daily basis. We're benchmarked against the 1 to 5 year
Treasury and Agency Index, so the government index, and that's what the portfolio is comprised of. We have sizable allocations to United States Treasuries, agency securities, including agency mortgage-backed securities, and then a smaller allocation to municipal securities, specifically taxable municipal securities, and a very small allocation of cash. That's gonna run near zero since you have your cash held in other accounts. But there's always going to be some amount of liquidity buffer in the portfolio. Then when we're looking at the benchmark comparison here, you can see that we're out yielding the benchmark. So if you look at a market rate, what you'd expect to earn on this, we're at 4.3% as the annualized yield on this portfolio at the end of June. That does move up and down on a daily basis with the market, but it's out yielding what you would earn in just a government only or to the benchmark at 4.17, so close to 15 or 13 basis points ahead there. And we're running a slightly shorter duration, which has benefited the portfolio as rates have moved higher. Being shorter duration is the position you'd like to be in, and we're taking those strategic positions while maintaining top tier credit quality. So we have a AA+ average credit rating on the portfolio, right in line with the benchmark and the US Treasury. And then you can see we're positioning this bottom chart here as a duration distribution chart to see the percentage of the portfolio that is under 1 year, between 1 and 2 years, 2 and 3 years, 3 and 4, and beyond 4. And it's kind of that bell-shaped curve, which is typically what we're going to want to see run in a portfolio of this style. So maintaining duration exposures across the allowable space, out yielding the benchmark, and have top tier credit quality. Are there any questions about the securities held in the portfolio at all, or method of operating there? Then on the next slide here, we do have the performance of the portfolio. So this is a month-to-date return here, but if you look month-to-date, quarter-to-date, year-to-date, that's all generally telling the same story, which is returns have been very low. This year, we're outperforming the benchmark. So on a gross basis, over the prior month, the portfolio earned 11 basis points, versus the benchmark's 6 basis point return. But this is related to that yield or market yields going higher. So if you own a 4 or 3 year bond and the yield in the market goes higher, the price on that 3 year bond moves lower. And as that moves towards maturity, you recoup that price movement. So we view this as a short term kind of noise in the portfolio. If you look at longer term, longer horizons here, the trailing year all the way out to the trailing 5 year or since inception, you can see your portfolio is yielding almost 50 basis points more than the benchmark. So strong total returns for the portfolio, and definitely a benefit to the city's finances. Any questions at all related to performance?
One thing I'll say here, because we work with this type of data with a lot of cities, and this is always one that I think catches attention because they'll see a 5 year return of one that came to at 1.93%, and that'll look low. And so we always have to go back and remind people where we were 5 years ago, coming out of the pandemic when we were at zero for a long several years there. So when you come out of zero and suddenly go up to 5%, as Ben mentioned, when rates go up, security values go down. And so that 1.93% is a total return concept, meaning going from 0 to 5%. There's definitely some volatility, and so it impacted overall returns. But as the market is normalized now, you'll see kind of those, I would say the trailing 2 years, better indicator of what we should expect in this kind of more stable market environment, which is very volatile coming out of there. So skew a lot of these performance numbers.
You're talking the Fed rates, not interest rates?
Both actually. So the Fed rate and broader market interest rates are tightly correlated. And if you think back to that time, the Fed was at zero, but in 2019 and 2020, all the way to 21, all interest rates out to 10-year were very low. Like mortgages are a very salient example of that in the personal balance sheet. You can think 2% mortgages, those are gone, right? We're looking at substantially higher than that. So that's the entire yield complex was extremely low. And then as the yield environment moved higher, that put downward pressure on those prices.
And so with the Fed rates up now, that should be a better yield for our funds.
Yeah, we're absolutely seeing positive carry. So when we're investing in a portfolio at a 4% market yield, you're clipping coupons, you're getting monthly income at that 4% level. And that provides a lot more buffer to price movement. So we're not seeing negative total returns, even with a pretty significant move higher in the second quarter here. We still saw positive total returns for the quarter, which is a benefit to investing in a higher yielding environment.
Kevin, in 22, when the Fed started raising rates, bond funds, mutual bond funds fell 15%, right on the duration.
Yeah.
Even short-term stuff, so it's that money with it, bad.
Yeah.
Just,
So movement of that money back then into some different sources might have been a better move than just letting it sit there. Potentially,
If you can,
you know,
if you.
I mean, I know it's iffy. And
Well,
hindsight is 20/20.
Yeah, so hindsight, like you go back and cherry pick the exact perfect security, I wish we could all do that. But if you look at total returns of a 1 to 5 year fund versus cash only fund, through market cycles, you see a substantial pickup to maintaining duration of your portfolio. So, since these are dollars the city has determined they didn't need, to have cash on hand, our recommendation would be to maintain longer term portfolio for those type of dollars.
you mean, longer term, you're still talking 2.5 years.
Right.
Right. You can crush.
You're changing from a 7
Yeah, yeah.
overnight portfolio to 2.5.
So I have a question. So obviously, as a city, we could decide what to do with any of these funds. If we move forward with things in our city that cost a lot of money, since we have so much money there, can the city, instead of just funding it, you know, like if we're gonna go out for bonds, right? And we're gonna have somebody go sell $20 million of bonds for us. And then we pay interest on that. Can the city fund those bonds themselves and collect the interest? Wouldn't we get a better return? Or is that not something you can do?
There's some type of structure that you can't buy your own municipal bond. I don't know exactly what this rule is, but I know we don't do it for any clients that we manage money for, and it's not because it wouldn't always be attractive, right? If you're issuing debt at a higher yield, but there's concentration risks. I believe there's actual rule against buying your own municipal bonds.
Yeah, I mean, I guess I've never been asked that specific question, but depending on your borrowing rate too. You know, there's IRS rules around arbitrage and all these things that you have to kind of track and monitor. So that would be an interesting discussion to find out, A, is it legal? But then B, what would that mean from an arbitrage standpoint and from a just general operating standpoint for managing that debt versus, you know, because this market rates in the environment or the investment environment change, what impact would that have on your ability to fund debt? And there's a lot of dynamics.
Well, you lose all your liquidity. I mean, then you might as well just spend cash.
That's our broad-based opinion on buying municipal, so they are allowable in here. We do have that small allocation, so we maintain some to enhance yield. But in general, if we need to liquidate a municipal bond, like an individual issuance from any municipality, you're gonna pay a pretty wide bid-ask spread on that, which will, if you do the total return analysis, eat up a lot of the return you would have gotten versus just investing in a very liquid treasury or agency-backed security.
Thought I'd ask.
Very good question, so appreciate it.
Maybe Kevin, a line, like I'm kind of with you a little bit, but for me, more the question is, all right, if we haven't touched this money since 2019, we are policy driven, right? So do we need to come up with a policy? If these funds make X, we can take Y out to offset levy costs? And apparently we must not have that policy in place, or we've never done it.
We do.
We have an investment policy that was included in your packet, and it explains, you know, how the city is allowed to invest those dollars. I don't think it's been reviewed since 2019.
But does the policy, I apologize for not catching that through there, but does the policy go into detail about? I mean, the idea of having these is to offset tax, like we're making money, so we're not having levy.
The interest rate on the general fund does go right to the general fund. And I mean, I've had that discussion with finance
Okay.
about, let's actually budget for that because we know yields are up. So I
Okay.
think I mean, of that 20 million, that's general fund.
Yep.
I mean, our levy's lower because we're earning interest.
Yes, and
Yeah.
then we also break it down for the amount we levy. So we have our general fund levy, so that's that fund 101. But then when we look at our parks and any other form of levy we have, if there is a dollar value associated with it, they have their own interest accounts. And so we divvy up our interest based off of what is earned in those money market accounts and in our investment portfolio. And that is done, we normally do two transfers, and so it's normally done in that June time period, and then we'll have our auditors provide us the final recommendation of what those final investments should look like. And then with that, the policy does not touch on whether the council can pull or take funds. It's more so on what can we invest in, what are our safeguards, and who can we work with in the investment side of things. If that is something you would like to explore more, there's no reason that that can't be a staff directive.
I guess, what are most cities doing? Is it all staff directed, not council input on that piece of the,
For the what are you referring to?
to your point about how much is taken out and what kind of pulling those levers?
I
Like,
think that's always a council prerogative. Staff would carry out the direction of council in a policy, but that's a decision for the elected body to make all the time.
So in our 10-year CIP, and we're showing that, hey, we need to raise water rates by X% each year because we got this project planned out here. It'll be negative if we don't. Correct me if I'm wrong, but I assume that as part of that spend down, we're spending some of this 20 million, right?
No, there is no plan within that 10-year plan to touch these investment accounts. And so maybe that is the next. Maybe that's the next action item or,
Okay, I wasn't
Yeah.
following.
we're gonna be, invest this money to offset the cost of taxpayers, and so, like, when does that come back so that actually happens?
so.
And
it
right now,
is-
there's no plan to do that.
No, minus the interest that's earned, but we could take the 10-year plan. Look at cash flow needs, look at how it's divvied up, and then sit down with our investors and. Look at, does the 1 to 5 year make sense? What opportunities do we have to pull from this funding? And then what is the cash flow needs and the liquidity of some things? So there are some things in our investment accounts. That we can't necessarily touch just with the type of money it is, whether we have to give it back or like certain things along those lines. And so there is, of that $20 million, there's a pocket that is just money that needs to be set aside for X, Y, and Z. And so then we could work with that, and then we could bring that back to the council, and that could help formulate the conversation.
Well, as I say, so, I mean, I think there's two things that, in my mind, at play here. So, on the one hand, we have our fund balance policy that we talked about. And I understand why, we want to keep 50% because we only get 2 infusions a year. So what is if there's one that I read through, I read through the packet, but is there kind of guardrails around, hey, somebody set a target of 20 million 20 years ago, and we got there, we're gonna hold on to it forever, or is there some guardrails around these managed accounts that we want to get it up to or allowed to bring it down to? Do the League of Minnesota Cities have any guidance for a city like
Or
ours?
do you guys have guidance on what that dollar, what that looks like? That's.
The challenge is it's gonna be different for every city, so like the fund balance policy you referenced, I'm assuming that's for your general fund, is that
Yeah.
fund balance policy? So that covers your 101 fund,
Mm-hmm.
and then you've got your water, and your sewer funds that are enterprise or proprietary, so those kind of fund themselves to do water fees and everything. So then what you're looking at is more, capital projects related to the utilities, and as you look at a large project coming up in 2 years, how are you gonna fund it? What's the funding source? Is it borrowing? Are you gonna tap into your investments to help cover that? And so there's a lot of kind of pieces to the puzzle that all kind of come together to paint kind of that long-term cash flow. So it can get a little challenging to kind of piece it all together. We could certainly work with the city and helping develop that. We have some tools for that. But there's just a lot of factors that all kind of come together to drive out what that looks like long term. So we can kind of project out based on budgets and different factors, you know, does that show that your balances would be increasing? Does it show if you're tapping in for some projects and pull it down to 15 million or whatever? You know, we kind of look at that to see long term what that might look like.
Well, turns out we have a major project coming up in the public works facility, and so that's why I think this is part of the reason why I thought it was good to have this conversation and to see what can we pull out of that fund to help offset this cost. So I don't know what the rest of the council thinks about maybe direction and how that might look, or if you think that's something you want to think at or see.
Maybe we should look at every option.
What next steps would be on something like that.
I can sit down, after we get direction based off of what was in the 10-year plan as it relates to the general fund tonight, we can play around with that. And then I can provide them a more updated snapshot of what that 10-year plan looks like. And then I can set up a meeting and we can take team some ideas on where to go from here. And then look to have something back in front of the council.
Makes sense, I think.
I mean, a lot of it's like I said, just that long-term plan. You know, we know plans can change, and I take what the plan is as of today and then project everything that they don't find what that overall balance looks like. Moving forward.
Yeah.
So we can run different scenarios where we borrow for the public works facility versus using internal funds.
Right. Do you have anything else for us this evening? Or
No.
thoughts?
Other questions have to answer.
Any questions ever?
You can raise your very own closure slide if you like.
Oh, yeah.
But you guys can check the box with your compliance department.
There we go. But no, thank you for.
Well, great,
having us.
thanks.
Yeah, thank you guys. We appreciate it.
Thank you for time and.
Yes.
Thank you.
Hopefully sometime in the next 4 weeks, we'll talk.
Oh, yes.
All right, thank you.
Yeah, have a good night. Right, 5B, Fund 101.
Good evening, Mayor and council members. We are gonna go over our general fund budget, and that is solely Fund 101. And so we have previously discussed our capital budget, and now we're gonna talk about Fund 101. And then at our next budget workshop, we're gonna talk about all of the ancillary funds. So that would be our water and sewer, that would be any debt funds we have or anything along those lines. This is solely that Fund 101. A bulk of this goes to the day-to-day operations. Those ancillary funds also support day-to-day operations, but this is the driving factor of the operations for the city. As I previously mentioned, we will have our budget timeline slide at every single budget presentation. This is our third budget workshop of where do your taxpayer dollars go. Currently, we are debating, and there might be another budget workshop meeting between here and the 17th, just to finalize a few things prior to me going out on leave based off how conversations go tonight and how quick I can work with now Corey and his team with getting these investments back in front of you guys. So a high level summary of what that Fund 101 looks like. We have budgeted roughly $15.9 million of revenue, $16.1 million of expenditures, and so that is not a balanced budget. We can do this for a couple of reasons. The first reason, 2025, we came in under expenses, so there's a little bit more room in that fund balance. This is solely based though off of our 10-year plan and those projections. I know we've had previous conversations with the council of where should that policy actually fit. And so with pulling down this 2050K and having that not balanced, we're still sitting at that 50% level. And so there is room to then bring down or buy down the levy with that fund balance we would just look for council's direction as we work through this presentation, if that is something they would like to see. This is solely based off those 10-year plan projections. And then we would have that beginning fund balance of 7.9 million and the change, and then with that ending at 7.69. So what does that actually look like in practice? So as you can see, this is a high level overview levy slide of where the levy looks at today. So currently, based off of the capital improvement plan conversations we had last month, the 10-year plan, and what is in this presentation, our levy sits at 10.55% increase. And so that factors in everything in this presentation, factors in everything we have previously discussed. And then that also then has, as of now, that fund balance at that 50%. So that is based off those 10-year plan projections. All of that can be updated based off council feedback. High level, that would bring our total levy to $19.66 million. And that is before counting for our fiscal disparity adjustment. And then of that, 69% of that levy share goes to the general fund, and the remaining amount goes to either capital funds or our debt service funds. Any questions? So then of our general fund revenue, $13.4 million comes from those property taxes, and that other 2.4 million comes from department revenue. And so when we break down these revenues, you don't want me to talk anymore about this.
Guess we don't have any.
I did confirm with Dave as we were reviewing these numbers, this $10 is supposed to be in here. It's not a typo. It's a gas credit we get for the machine shop. It's the first thing I asked him during our meeting to make sure. He said, no, keep it in there. And then you can see that our largest driver for non-departmental, non-property tax revenue in our general fund is that building inspection. And this comes from fees that we are able to assess with different types of projects that those building inspectors go to. And then when we look at police, you can see that's a large portion, but this also then factors in any grants that they receive or any state aid funding. And so a bulk of that 790 comes from state aid or operating grants that are provided either through legislation or that we went out for and applied for. So this might not be true revenue that is generated from speeding tickets. It is from it's from those grants and that supplementary funding. And then you'll see the same thing with fire and the fire pension. A lot of this could even be, so the fire pension is a pass-through cost, so there's an expense for that. And then there's the offsetting revenue, but because they net each other out, we still have to keep them in for accounting purposes. Finance is a little bit goofy because we don't generate that money. That's not our interest allocation. That is the way it's currently structured in our accounting system is any administrative permits. So the golf cart permits, the business licensing, all of those ancillary things that people would go and get their licensing from through the city is what's reflected there. And then the other ones are various level matches or other type of just those ancillary fees, what we would collect. And so the biggest difference between this slide and the last slide is you can see that this breaks it down. And then the big difference here is we have that noted general fund revenue and property taxes. So this is the largest source of revenue that is in the operating general fund budget, would be those property taxes collected. So then on the flip side of this, what does this look like for expenses? Our largest budget driver for expenses will be our public safety departments. And so that would be our police and fire, and then streets and finance. And finance, this also then supports any catch-all city expenses. So we have a lot of the operating supplies in there. We have office supplies, So basically, anything that could affect a lot of people, affect anyone at City Hall, just for coding and accounting purposes, it falls under that finance line budget. It's not true financial services that cost the city that $1.1 million. And then you can see that we have a large range of other expenses and other departments. Based off of this previous slide, you can see that our inspection department is looking to generate that $800,000. And for expenses, it is coming in, well, just roughly under that. So it is currently the only operating general fund self-efficient department. Good work, Abby.
Good work, Abby.
And then what actually makes up these categories? I wish. This dark line right here is your personnel, wages, and salaries and benefits. So this would be anything from wages to health insurance to taxes that we would have to pay to keep staff employed. And then you can see the next leading category in all of these would be our professional contracted services. So that looks different for every department. For administration, anything that could fall under here would be cleaning services, auditing services, anything that we would contract out to then come in. And then you'll have our insurance, and we break insurance down by division and department. So police, fire, and all of those have their own, it's all under one insurance invoice, but we spread it out across to all major categories. Supplies, repairs, and maintenance and equipment. So these could be anything from office supplies to operating supplies. If someone needed a ladder, if fire needed nozzles on their fire hose or things along those lines, that would fall under those buckets. And then other would be miscellaneous expenses, and then training and professional development. Any questions on expenses?
So in the public safety, let's say police, can you go back to where, police broke out? Is it
6.7.
Okay, does that contemplate or back out the $790,000 in revenue?
Nope, so these are two not separate slides, but this is revenue, our line items, and then those are fully allocated costs and fully allocated expenses separate from these expenses.
So their overall budget would typically then be $790,000 over the 6.7?
Yep, no,
No?
so the 6.7, and then technically it would be, if we were looking at it as an offset, then it would be that 6.7 minus that 790. Sorry about that.
Go forward. So here, I'll go back one, right there. Okay, public safety says full police and fire. That's why it's over 8 million.
Yeah.
Got it.
I tried to put them all and then the slide just got too hard to read.
Yeah, no, for sure.
And then, so I'm gonna have department heads jump in here. Our operating budget over the years is very stagnant. A lot of the fun, exciting things the city gets to do come from that CIP or those capital improvement projects. Our operating budget really represents those day-to-day activities. And so these are the major swings that we're seeing within the operating budget. And you can see that some of them are smaller, like the administration line for starters, it only changes by $8,000. And then when we look at turnout gear, that's only changing by that 5. And so I pulled the biggest expense changing from each of these departments. So it is not an apples to apples scale. There's not a certain percentage that triggered this, but these are the biggest changes that we would look to see within each department itself. And so I'm gonna have Jolene start with administration.
Thanks, Ellie. Mayor and council members, you notice that there is a significant increase in the seminars and training line item for administration. That contemplates the fact that in previous years, especially in 2025, we didn't have enough money budgeted to account for potential tuition reimbursement, which is a policy of the city that provides up to $2,000 for staff members to engage in continuing education that is specific to their role. So if someone within the administration department had submitted for a tuition reimbursement request, we wouldn't have had budgeted dollars to cover that expense in 2025. So I increased our seminars and training to account for that. And also put in some money to contemplating a full department of 4 people next year, which is what we have planned, city administrator, myself, HR, and deputy city clerk. Just to cover training and seminars for each of those staff members to attend.
Does the policy have a per employee reimbursement cap?
$2,000.
2,000 is the
It
number.
is, yes.
Community Development Department, the professional service category of $15,000, that's directly related to abatement services for code enforcement. You don't mow your lawn, we ask you to mow your lawn, you don't mow your lawn, we pay somebody to go mow your lawn. We assess that, if you don't pay us back, we assess that onto your property taxes. So it should be a net of that increase of the 15,000. The increase in engineering charges is a little unique because our contracted planners are through Bolton and Mink. So it's an engineering line item. As we're seeing development rise, we're continuing to need to use the contract planning services to just help a lot of their hours, those day in and day out hours that they're using to work on the development themselves. We are billing back to the development itself. But the coordination that it takes for our team to keep the communication open, we're still standing at those meetings and making sure that on a weekly, monthly basis, we're interacting with them. That's what that additional cost is.
So, would an example of that be, what we've experienced with these neighborhood meetings being getting ahead of it and having these neighborhood meetings, specifically in the 3 tower, the cell phone tower, Tim's Arena, and Clear Lake? Are we billing those people back from day one, or is that at the period we're at, for example, Clear Lake, where we've had some significant staff time, is that not billable back to those developers?
At this point, the city's policy has not been billed to bill back staff time, but it is to bill back any consulting planning time. So any staff report you're seeing from staff, generally, we start with the base from our consultants that are analyzing the actual applications that have kind of been trying to do some of that back end coordination for us. The 13.5 you're seeing is us just keeping that communication going and making sure we're still on top of the development. Neighborhood meetings, those sorts of things, our meeting staff being there, our staff being there, we're not charging that back to the development. But getting ready for those meetings, some of that does get charged back.
But how do we charge it back when they haven't even submitted an application?
We don't do any neighborhood meetings, any public engagement unless there's an actual formal application. So when it came to Clear Lake Apartments, a concept plan application was submitted. So we do already started that bill back in escrow kind of debit process. Yep.
Public Works. This slide hasn't been correctly, this one's inverted, but so 17,500 would be professional services. That is, including the rent we pay, St. Pete's for, the parking lot. That wasn't accounted for in the 25 budget, so. It got adopted in 25, so it wasn't anywhere in 26, so it has to be somewhere in 27 because payment that. We also have a service for the block cameras at Lakeside Park and it's at Fenway. And then we have safety training now provided by Safe Assure and Park Streets, Utilities, Sewer, Water, Storm, all pay a percentage of that. Pay for that annual expense for training. So that encompasses that $17,000. For operating supplies, last year we were right up against the budget, and that wasn't taking in Fenway Fields. I'm assuming we're gonna go over budget this year on operating supplies, just for the things that we're doing out there. We also got a pretty good list of the stuff that needs to get fixed down out there, batting cage nets that are falling apart, and some mounds that are portable mounds that are in need out there. So working with Cal, like kind of an estimated increase that will not just be a one-time deal, but will be an ongoing. place all the nets out there for the setting up like kind of plan to replace one every 4 years to kind of get that going. So. And just overall costs, just irrigation heads, and it just goes up. So we've stayed at that $40,000. And our maintenance supplies probably for the last 5 years, so this is probably our actual first increase. 20 years.
So did I hear, did you say that? Cause there's flock cameras, I hate to say it, it's the new 5-letter F word, I guess, flock, I mean, fortunately, but is that coming out of? Because they're in parks, it's coming out of, part of it's coming out of park.
Yeah, those are the real time cameras. So there's the license plate readers, and then there's actual cameras. So there's 2 at Lakeside and 1 at Family Fields. So they're charged to the Parks Fund for viewing park safety park viewing.
And I want to have Chief here, what is the total cost of the flock? Per program year? I don't really need it right now, I'm just more
The
curious.
total, I don't know the total off dues, maybe Ellie. I mean, I know that's a part of the contemplated increase for computer support for police, in 2027. But I don't know what the total off the top of my head is.
If you wanna work through, the public safety one, I will be able to get it.
Okay, sounds good. Okay, did you have anything else you wanted to add, or did you have
Any other
any other
questions for
questions for Dave? Okay, so, both the chiefs are not able to be here tonight. So they provided some background on their proposed increases. In police, the computer support line item increase, it attributes for, an approximate $48,000 increases specific to the flock cameras. Chief Handgraf suggests that including these flock cameras in the operating budget rather than in the CIP is his preferred method for budgeting for this expense. The remaining increase of that, the computer support line item, reflects the higher cost for the Washington County Sheriff's Office records management system, their mobile data computers, Axon services, so the body cameras and the cameras that the police department relies on in their interview rooms. And then, just other technology that they have to use in their day-to-day patrols and operations. Regarding police motor fuel, Chief indicated that the recent fuel increase prices are just reflected here. We all know gas is expensive right now. They have switched over to a significant amount of hybrid vehicles, which does help. But the increase there supports what they're seeing daily in their fuel expenses. And then for fire, see what Chief Newman said here. So Chief Newman is proposing an increase in their part-time wages due to the addition of 4 on-call firefighters in 2027. The continued growth in their department that they're seeing based on their increased calls. Their turnout gear, this is something that just, it's a constant recurring expense, you know, they have to maintain safe turnout gear, so, the increase here will help cover the expenses for the 4 new firefighters and then replace equipment that has reached the end of its useful life. So that is why you see an increase of about $5,300 for turnout gear in 2027.
Back on the police computer support, out of that additional 40 or 62, you're saying 48,000 of that would be flock?
Yes.
So didn't we have like a longer term contract with them? So was it just a 1 year? Like, why is that increase? It seemed like we had a contract with them, if I recall.
So this is twofold. The first is the previous contract and the previous expenses were noted in the capital improvement plan because a lot of it was the installation of the fixed asset themselves of the camera. And so year one was 52K. And so that included the camera and then the software. And so now moving forward, it would be that 48 that was mentioned. And so that breaks down to roughly $3,000 per camera per year. And so it's really not a increased expense versus moving it from the capital improvement plan, as they're no longer capital expenses of the camera, to the operating expenses, because it supports the day-to-day operations.
Software expenses associated.
Any questions on these items?
How long a contract do we have with Flock?
Sorry, can you repeat that?
What's our contract with Flock?
I'll just say it's a 5-year contract, but don't quote me on that. I'm trying to find it here. Ellie, if you want to continue on, I will have to dig up the contract and then I'll bring back.
So as we previously discussed with council at the very first budget workshop, we talked about the addition of 4 new positions plus the promotion of 1 internal staff member. And so I'm gonna have departments heads once again, just give a brief overview of the positions they're recommending, and the value add they bring. The only other thing that we're noting here that's different than what the council would have seen is this line here where we talk about the net levy impact versus just the levy impact. And so with the addition of the 2 positions within community development, without them, there would need to then be an offsetting additional professional service cost. And so there is the cost of the position itself, and then we're taking that and then we're gonna add back into what then that net levy would be with adding those services back in. Because currently with where the budget sits right now, the positions themselves are in, not the contract services or not both of them. So it's, the positions are budgeted. If we were to remove the position, staff would then look to increase whether it's professional services or a different line item by those additional costs. But with Jolene looking at her stuff, I will just touch briefly on Luke's. They are looking to add 1 patrol officer. Within conversations with Luke, he said he would be open or having conversations of really looking at the evaluation of the start date. And so all of these positions assume a start date of 1/1. He does see an increase of call volume along with the growth of the city. So that is why he is recommending the 1 additional patrol officer. And then as for staff promotion, this would be an additional, not an additional staff, but mainly a transition for a current staff to be a lead of a team. Dave, do you want to take over your parks?
Yep, we discussed park superintendent a couple of workshops ago. It's building out that organizational chart for public works. Council's done a great job in getting us staff, but we just started needing people to start leading those staff better. So it's just filling off the top end of that department. Any questions on that?
Yeah, you say more about what their role is.
They would merge parks programming and parks maintenance. So right now, parks programming and parks maintenance is under public works. I have the direct lead of both of them. This person would be the direct lead of that, and we're kind of a more focused on this person will only care about parks. They will care about park development, park maintenance, events, programming, all that stuff. So it's just refining the department better. You saw with the utility superintendent that was 1 or 2 years ago, that he stepped in his role and he cares about utilities. That's what he cares. That's his job, is to care about that department and getting, that department more efficient and getting more things done. So it's just having more leaders focused on a single department to make those departments better.
For community development department, listed a planner. I know that there's been an interest in creating more, or another economic development position. I don't believe we need a full-time or have the room or needs for a full-time economic development position. I believe our needs really lie in the planning, which is, a lot of it is reacting. It's the permits, it's the land development applications, every building permit that needs to be reviewed. But helping free up some of the administrative time that both Stephen and I end up taking in those roles, so that we can focus on economic development, help kind of a little bit more of that front level line and what I call kind of current planning work. It also would help us to have in-house staff to kind of help with some of the long range planning that I think is still outstanding in terms of border studies and fixing our ordinances and all those things that kind of get back burner. Any questions?
Well, you get the two positions, right? I mean, that's a big spread between 137,000 and 15,000. On the planner position.
Right, because we are billed back we are using a bill back for we have two contract planners, Madison and Nathan. So we are charging that back directly to the developer. It would be a little bit of a shift in that we would probably not utilize them as much in our land development world. That helps bring down those costs for those developers. But yes, that is the 15,000 is really just our kind of weekly, monthly coordination, not the meat and potatoes work. Also doesn't give us, if we're gonna do things like, let's just say a Broadway Avenue study or something, we're gonna hire a consultant, and that 15,000 would be increased versus trying to do it in-house. Probably still would have some consultant services for doing long range planning studies, but having the staff there in-house to manage them. Any other questions at least? Okay. Building inspector one, this is something that we've talked about, I think, in the past, is kind of finalizing that pipeline of our inspections program with the building permit tech. We had a building inspector one position that the council did authorize us to advertise as building inspector two, because our needs are right now immediate, full inspection levels, residential, commercial, industrial. Reinserting another position in here, and a building inspector one can help them help us potentially transition a tech into a one, into a two, into a future building. So the idea being we complete that employment pipeline there. We are finding that it is not necessarily an industry that everybody's just jumping to go in, and so building the system within, I think, is a good model for us, most sustainable. As Ellie mentioned, that is, they are sustainable division. They're not taking necessarily away from other areas. Questions?
So this inspector one, then would that fully get us off of inspect or whatever it's called now, or
Yes.
Bill Wright?
Yeah, we may end up having to use them just very temporarily if we had things like a vacation overlap. Training for building inspections only happens a couple times a year, where it's, a week long, and it's the only opportunity for all of them. So there might be some circumstances like that where we do have to incur some cost. It would be minor compared to where we've been more recent.
Questions on staff?
Are we fully staffed in police right now? With the patrol officers we had last year?
No, there's still two positions that need to be filled, just due to a recent vacancy, due to a voluntary resignation. So not yet fully staffed, but getting.
We had two, didn't we, last year?
We did.
That was because of call volumes. I just struggled with that one a little bit. I mean, it's the better part of 1 point on our levy. As a council, we heard that there was a need there because we hadn't had staff for years. Call volumes were up and call complexity was up and all the things, why we said yes. it just feels a little surprising that we're going right back to the end of another one.
I think that's a fair point. I think that there is some opportunity to see what is shaking out after we're fully staffed in the department. I know that Chief Hanegraaff is really focused on getting these positions filled. We've got some internal folks who are perhaps going to be able to move up from that CSO position up into a sworn patrol position soon. But to your point, council member, we haven't had full staffing there. So it's difficult to analyze that at this time in light of another position request. Chief Hanegraaff does believe that with the increase in population and new rooftops, that there is a need for it. And I can ask him to submit to the council some of his reasoning for that. I don't feel like I should speak to it and put words in his mouth. Unfortunately, he just wasn't able to be here tonight, but I'm certainly happy to ask him to send an email to the council, just kind of laying out that position a little bit better. As to the staff promotion in that department, Chief Hanegraaff understands that that's it's not a necessary need. It would be beneficial to the administrative staff to have a non-sworn supervisor. But also they're doing a great job right now. Administrative staff is supervised by the captain. And so he's kind of learning their roles and takes that on. So Chief Hanegraaff is understanding that that's probably an area where we can hold off a little bit, should that be the desire of the council. And again, to Ellie's point, when she started, these are positions that were kind of planned out in advance. So just continuing to move these forward until we get direction from council.
As far as rooftops, I mean, yes, there's been activity. There's a lot of activity coming, right, in terms of builds and plans and all the things that Abby's team's working on. Abby, can you speak to, you may or may not know, but I mean, over the last 12 months, like how many families have we added? I mean, i.e. roofs have we literally added versus, hey, these are planned and will eventually come?
Yeah, that's
Because,
Yeah, that's a great question. I think rooftops are down compared to even where they were the last year. I think last year was down from the year before. I would have to run the numbers to know. I think that's the tricky part that we're in is that, and that's partially the planner and building inspector one as well, is it's the staffing up for the anticipation of the development that's anticipated from. So when we're looking at planning, there's a lot in the works. 2027 construction, I would say, is probably going to be on par with the number of homes we've typically been doing under rooftops a year. I know Chief Hanegraaff is not here, and I also don't want to put words in as well. But when we start also talking about apartment complex sites, new multifamily housing, that does also, I think, add, not necessarily just those single.
For sure. I think the only, correct me if I'm wrong, but the only multifamily unit that's come online is most recent one with the pool, right, in the last 12 months. Otherwise,
Forest Creek, yes.
all the others have been built out.
They're built out or in a planning phase yet to be determined if they'll move forward.
Yeah. I mean, I guess I would really like to see Chief, what he or Rick had great numbers leading up to last year's budget conversation. And, in my opinion, and I think the council, seeing the growth in number of calls justified, hey, yeah, we need to add some headcount. Where are we now? Right, in terms of 12 months later, is it leveled out, or like, is there been the impact? I don't know. I just struggle with that word off this one.
That's fair. I'll ask Chief to gather that information. We can certainly even present it at next Tuesday's meeting.
Sure, thank you.
Just to circle back real briefly to your question about the plaque term, it's a 24-month term with an automatic renewal clause in there unless either provides notice. So if we were to provide notice after that initial 24 months, we could terminate, otherwise it would automatically renew for 12-year increments.
12 years.
I'm sorry, 12-month increments. That would be a heck of a contract for the company, wouldn't it? 12-month.
Up in 12% annually. Thank you.
Any other positions, council, you feel strongly for or against, or just to give staff some direction on? And if you're not ready to state that right now, that's fine too, but just, I think the sooner we can get more direction, it's gonna be helpful.
I would agree, Mayor and Council, if council does have opinions or thoughts about staffing proposals, the sooner we can get that input, the input that we're getting about the additional police officers significant. The sooner we can get that input, the sooner we can start making, some proposed changes for council to consider as we get closer to that preliminary levy date in September.
I'll ask them, okay, a little bit more. The parks superintendent, like, what do you see as the biggest ROI to adding that? I mean, it's not an insignificant salary benefit.
It's a bigger focus on parks, it's not development driven, I'm not asking for a park superintendent because I think we're gonna get 200 more homes, improving that department. But if I was looking for more staff, I'd ask for a maintenance operator because it seems to be bigger, so it's a lack that I can see how much it improved by having utility superintendent manage an department. That, the parks programming, credit to Cal has really been growing that. Parks maintenance is really improving and doing a lot of really nice things, cool things around the city. It's finding that person to spend 24 hours a day managing it. It's a knock on my own self. I don't have the time to spend that to just worry about parks all the time, right? That's why I found so beneficial about utility superintendents. They not only took some workload off of me, but they improved that department. And that's what I would see for the park superintendents for just more efficiencies, but like I said, better events, better maintenance practices, more focus on aesthetics, just all these things that, yes, I'm trying to follow through things and making sure stuff is done, but when this person doesn't have to care what road is getting patched today or how that well is gonna get water in the city, and all they care about how that park's gonna get done, you'll see a better system, just better parks, better maintenance, better all the way around. So I guess that's why mine is probably the one different out of all there. It's not development driven, it's just, system, improving the system, improving the department.
Okay, thank you.
If I could just add one thing from a community development perspective to land dedications, the idea of what are we doing with some of these parks, helping Kyle and implement the parks commission, implement that new parks plan that you're going to be seeing in a couple of weeks. Right now, there's, Dave does a little and then I do a little, and sometimes planners get involved, and having that one person is really, I think, gonna bring this system to what I think this community wants the system to be. Because right now it's a little hodgepodge. We'll continue to do it. But I think it definitely needs that one person overseeing. I know from community development and planning standpoint, having the utility superintendent has been really nice. Nothing against Dave, he's always been really responsive, but having that one subject matter expert really helps us go right to the source and find information quick, or work together on very pinpointed things that Dave can't always just stop and do.
Thank you.
And I would just make a comment with, planning and the building inspector that, that whole department, makes us a lot of money. And I think it's really good to support something that's making us money. And I think by having that planner and that building inspector, it's going to continue to generate more revenue for us. Because it's going to be more closely paid attention to some of these things, especially on the building inspection side. Just an opinion.
Yeah, I would tend to agree a little bit with you there, Kevin. I think for me personally, and just what like my time on council and opposite is the exact same time, and Hannah's, just what that head count, what we've done, brought the city to. That's my hesitancy in that, adding some additional positions, we're just giving us some time to make sure the investments we've made are what we think they're gonna be, and it's just, I think. I'm not opposed to completely opposed to any of these, but I just think that weighs in for me as far as the decision as to how many and what we're gonna add, and then maybe it's not fair to throw it all in one bucket, but it's, the end of the day, it's head count for me, and we've been some people are very critical about we add too many people, and I think as a council believe that that's not the case. I think we've staffed things up, being responsible, kind of slow rolling it a little bit. I just, that's my biggest hesitancy right now, but I can send direction to both you, directly on positions.
I would, I mean, I guess from my perspective, the biggest pushback we get is because of potential tax increase, right? And if we can figure out resources and other ways to pay for some of these things in our city versus always just going to the taxpayer with some of these funds, potentially with some of these other changes, maybe that's not such a important, I guess, topic or issue from people. Because I think ultimately it comes down to not that we have the people, it's like, well, how much does that cost to me? And we've got plenty of funds that just seem to be sitting there. And maybe we could use it to offset some of these other things. Potentially.
Any thoughts, any additional thoughts right now? Don't feel pressured to, so if you don't want to.
Yeah, just,
offline.
I feel comfortable with the positions. I'd be interested to see what it would look like, for the tax increase if we were to do, and I think Ellie, you mentioned this, that Luke mentioned it, or maybe Jolene, starting the patrol officer, knowing that all of these positions would start at 1/1, seeing what the patrol officer, what a later start date would look like. And then same thing with the park superintendent. So then that way it would be maybe like a compromise. But
Like the
I
levy
think,
sits as 10.55, right?
Yep.
So I mean, if you start the patrol officer July 1, just drops it by 45 basis points.
And then, just a combined total of the staff. That 10.55% does include 3.4% with these staff additions, because these staff additions are assumed out of the levy.
So we don't do any of them, we're middle single digits. It's easy. Gene didn't hear me, he said, what?
I'll speak at the next forum.
And like Mayor Roberts said, if you do have any other additional thoughts or questions or anything, please email them to Jolene or myself, and we'll be happy to do analysis and talk about it. That goes with any budgetary thoughts or questions, not just about staff. Happy to answer questions offline, happy to bring things forward to the next discussion as well. And so this is just the high level of those breakdown of expenditures. You can see a common theme you're gonna see is that our public safety are our largest expenses. And then it just goes through all other departments. But I think we've hit home on these on the 3 other slides. And so really just wrapping this up with, 84% of that large pot of general revenue comes from our property taxes, with 2.8 coming through fees. And then police alone account for 41% of our general fund. And then we are looking currently with where we finished last year and with the budget sitting right now to draw down that general fund balance by 250K. But once again, this is all guiding that same principle of being at that 50%. So as you talk about, if you don't add staff, your single digits, this would be also another lever that the council could look at to pull, like, if you want staff to have that general fund balance at X%, we could bring that forward to the next council meeting.
Did we talk about changing that to a range?
Yeah.
Yes, and so currently with where it sits, the direction that staff has received is between 40 and 50%. All of the information that has been on this presentation and that has been presented to council this far has been based off the 10-year plan and other just guiding principles and documentation that has been approved by the council. So with that, if there are more iron things out, like, hey, can we see staff starting in June? That's something we could look at to bring down that levy if you wanted to. Okay, can I see what the levy impact would be at 40%, 45%, and then 50%? And so we would really look to right now turn to council, as this is the city's budget and what you guys represent. What would you like to see as staff, as it sits right now, knowing the levy's at that 10.55% going into, it is only July, but going into that prelim that is due at the end of September?
Well, I think if our policy is going to change between 40 and 50, I'd like to see it at 50, like to your point, 45 and 40 makes sense.
See those 5%
Yeah.
increments,
Yeah.
the variation.
And initially that 10.7% is what we're kind of establishing as our high mark,
10.55.
or 10.55, and then we're gonna try to come down from there. Isn't that what our goal is?
Well, that's just where, it's at with everything contemplated as we talked about through these workshops so far, and that's where it's at, but it doesn't, 3 point whatever percent if you weren't to hire any of those new hires.
Yeah.
Whatever the fund balance change, with that policy changing, that would ratchet it down.
And that's all coming from just tax levy.
Correct.
That's not taking into account any of the things we've been talking about at this point.
So
Could offset some of that.
yes, so basically your capital improvement plan, anything that you saw was supported, whether it was supported via franchise fees or other approved revenues. But a bulk of what you saw today would be we can pull those different levers and that would either increase or decrease the line.
So like for the capital improvement, like in the budget of, it includes, it's at 10.55, that includes about $1 million, right? For
Yep.
roads, which is up from 600,000 last year, because we had. That's where we did on the levy, because we moved that spend from franchise fees, or from levy to the franchise fees.
Correct.
So our franchise fees are about $1 million, and we're back to $1 million for roads, which is a $400,000 increase over last year. If you, let's say, Luke agreed that we didn't need that patrol officer this year, that would bring us down to 9.65 roughly, right? I think the one thing that, well, I'm not opposed to going below 50%, we just gotta be careful if we say, hey, let's save a few points by bringing us down to 47 or 46%, you don't necessarily get those dollars back. That's a one-time spend. That's the one thing I think Mark hammered home about. Spending that down is, you get to play that card once, and it's gone. So, something to think about.
But based on our projections, wasn't our levy actually 2 years from now gonna be lower?
Next year would be the larger increase.
26 or
Yep.
27 would be, but not 28. 28, it comes back down.
27 is the 10.55. 28, we would look to see that higher increase with the public works facility if we were to assume that debt. And then after that spike, then it would come down,
Okay,
but
so
it's all relative. And then another item that we have yet to discuss, as it's still very early on in the year, we would look probably to bring the number to council in August, would be where we sit today versus budget versus actual. So we were able to buy down some of the levy last year based off of not materializing or spending as much as we thought due to delayed impositions or other various factors. And so that would be also another lever we could look to explore.
And how about from an investment income standpoint, are we positive compared to the
Yep.
budget? If we keep avoiding a city administrator, we'll save all kinds of money.
Well, there.
All in favor? No.
And so, I think we've gotten a good start with seeing some staffing increments for staggering starts, looking at what that fund balance should do if we were to do 40, 45 or 50. If there's anything else you specifically would like to see, shoot me or Jolene an email.
Sorry. just one
Oh,
quick-
you're good.
in past budget years, we've seen significant portions of the levy increase attributable just to rising costs out of our control, i.e. insurance.
Yep.
What is that percentage of this year's, like, what is that inflationary number that we just, insurance? Is it as steep?
We're assuming for insurance an increase of 6%.
But what part of the levy increase is those?
Oh, I don't know that one off the top of my head, but I can get it to you and I will send it via email.
Yeah, that would be good to
Yeah.
know, just that fixed cost, because that's where, you know, when you do get pressure and it's gonna be, let's say it's 9%, you could say, well, 5 of that, almost over half of that is just fixed costs. That helps tell the story as well to the citizen, you know, taxpayers.
Thank you.
Anything else?
I'm ready to jump right into the next item,
Okay.
if there's no other budget questions or comments.
Great.
Perfect, so we're gonna look at the 2027 budget survey. And so this would be the survey that we push out on Facebook and we push out on various methods where residents can actually comment on what they think with these questions about that would impact the budget. Last year, we got 105 responses. I'm gonna let Jolene touch on whether that's a good response number for city surveys. It's more of her wheelhouse with how many responses we get for other surveys.
Yeah, it's relatively low, right? We're not getting a ton of public engagement or public feedback on these surveys. And I think we experienced that kind of similar situation when we held a budget open house, and we've done those the past couple of years. We haven't scheduled one this year because I think our 2025 or 2026 budget open house that we held in 2025, we had 0 attendees except for maybe a media member. And it wasn't one of you guys. So I think it's valuable it's always valuable to get resident input. They're the one, this is their budget, it's your budget, but it's the residents' budget too. So it's important to offer this up to try to hear what they want to see happen in the coming year. I just want everyone to have realistic expectations that we don't get a ton of feedback. We can push it out through social media, do email blasts, you know, talk to folks at Arts in the Park about it. We can have a QR code that people at Arts in the Park could scan and bring them right to the survey. So we're certainly happy to do that. But I just want council to have a realistic expectation of those survey results. I don't, as far as compare, you know, fun things like parks and park surveys, they get a lot more input than budget surveys do, unfortunately. That's just where people want to focus their time and attention. No one likes to talk about budget except for when it comes down to seeing that tax bill, and then they want to come talk to us about it. But we haven't had great luck with getting preliminary feedback.
What if we shifted from a budget questionnaire to like a strategic priority questionnaire? I just ran that page through my friend ChatGPT and came back with actually some pretty good ideas. So I'll email that to you. I'll email it output, and you can forward it back to council if you want to
Yeah.
solicit their feedback. But I thought it was kind of interesting.
So that is there's obviously a correlation, what this strategic plan is associated with what the budget's gonna be, and so getting that feedback from people is what they want. Maybe it is more around that and not just so specific on budget.
Good. I mean, if you guys, so maybe council members or past council members have just sat and seen, you know, that are filling out the survey, most people would rather see their taxes go down than up.
Yeah.
But if you said, hey, you know, if the city continue to raise, if the city costs continue to rise due to inflation, what approach would you most support? You know, reduce city services to keep taxes as low as possible, increase taxes only enough to maintain today's service levels, increase taxes to improve city levels or unsure. Then you can do a follow-up, like what services would you be willing to reduce if taxes were held flat? See what they said. Say stop for the parks. hold on to the 20-year-old parks. So I'll send it over to you.
That'd be great.
Perfect, so we're just gonna run through these questions quick, and then once Leif sends over his, then I will shoot them all out, and I would then look for council's feedback of whether it's just highlight the questions you like, and then we'll do a hodgepodge and combine them all.
I have a question on utility bills. Are those almost all emailed now, or are they mailed still, or what?
I think it's a combination of the two. We have a lot of folks in the community who still like getting that paper bill. They like writing out that paper check and they like walking it in here to City Hall with their invoice and their paper check, so.
Could we drop a survey into those envelopes to say postage and send them out? Because there are a lot of people that don't go on social media, there are a lot of people that don't go on Facebook, a lot of people that are not gonna come to Arts in the Park.
Right.
Not a lot of people that know how to use QR code.
Yeah.
Just maybe, because they're gonna mail the check back, or they're gonna pay, we might be able to get more return.
What's our billing cycle and our next opportunity to perhaps get something like that built out?
Or is it not enough timing?
I mean, we just sent out our Q2 bills, and so it would be Q3, but then we could talk about those effects between the prelim and the final. Just giving more people an opportunity, especially if we take it from more of the strategic standpoint, then because as soon as that finals approved, the next budget workshop, the next council meeting, we're literally sitting here being like, okay, in the 2028 budget. And so then we can even then start to build if it's more strategic of what people would like to see.
Yeah, some way to get, I like that idea, because that's it, just, I remember we were, I think rightfully so, there was criticism about what small number that was, and really, was that a really reflection, because I think we used it in some of the PR to talk about what the dollar, where we're at on the preliminary levy, I guess it was. And so, 100 and some out of 21,000, it's minuscule. So to try to get that sample size to be larger, whatever we can do to do that. Sounds.
So then, quick running through the questions, it's, a lot of these come right from the last year's survey. So with respect to inflation and property taxes for 2027, which statement do you agree with the most? So basically, do you agree, do you not agree? What are the top priorities for how the city should invest its resources? Public safety, roads, parks, economic development, or other? And then, are there other priorities you'd like to see the council address in future budgets that aren't currently being addressed? Is there anything else that you would like to share concerning the 2027 budget? If the city must make difficult budget decisions, what approach would you prefer? How important is it for the city to maintain strong financial reserves for emergencies? And how important is it investing in a new public works facility? And so I will take these questions along with Councilmember Erickson's questions that he's gonna send over and send them out to the rest of the council to help develop that feedback for the survey. And then we would look to either at that first council meeting in August, come forward with an action plan of how we're gonna roll this out, or at that August workshop. And I promise I'm almost done talking. Just a quick capital improvement plan update. So as we presented during our last budget workshop, we had a conversation that there were 2 pending grants for the airport. The first one was for the parking lot expansion, and then the next one was for an access road. The way it's budgeted in our current CIP is we are just looking at that 10%. However, we found out last week that these projects were not funded. And so then we would look to seek direction from the council of if this is something we would like to move forward with. If we are assuming levy dollars as that fund currently could not support these additional projects without the support of the levy. For the one alone, it would be that 2.3% increase. And then for the airfield access road, it would be a 1.4% levy increase. And then if we wanted to move forward with both of them, it would be closer to that almost 4% levy increase. Because the way it's currently budgeted, we only budget truly for those local match shares.
You should share that with that gentleman.
Well,
That's what I was gonna say.
apparently, majority of people didn't want the airport.
Well, maybe we need to have a runway tours that people could weigh in on.
We approved that, we approved. I mean, they can park on that lot next door, right?
Are you talking specific to a Life Link 3?
Yeah,
Yeah, they'll have access to that.
I mean, that's who this, what that parking lot expansion is for, correct?
Not necessarily, parking lot expansion would serve the entirety of the airport, not just Life Link 3, but
But it's behind there, right, behind those commercial buildings? It's not like.
And to Stephen's comments, my goal is to take a pause at the airport 27 fully.
is that the?
That's just
Seeing
my-
head nods here.
Maybe they all have parking in front of the hangars.
You know, I think it would be worth a conversation, Blake, for you to call Mr. Everline and talk about that, see what he says. What is the majority of the people that he was referring to think about that? Before we just say no.
So are you saying there's, you didn't say that this is not MnDOT, there's no MnDOT money here?
Correct. These
So we
projects
can't-
did not.
We can't afford it. It's not fun of a MnDOT. It's not even worth us. I'm not even having a conversation, unfortunately. I just,
We just put another $650 on our city roads.
yeah.
Small. Postage stamp that nobody out there wants us to spend money on.
Yeah.
What are the pros and cons, in your opinion, joking of those? Or the pros? We know the cons are.
I mean, the pros would be, increasing access around the airport with that access road, but just, there's very limited parking at the airport as it sits, and we want to continue to grow the airport. We want it to be an asset to the community, so we're going to eventually need to increase those spaces and access. It's tough, there's not money in the airport fund to support a project like that, and it's a challenging situation. We knew going into submitting those requests to MnDOT for these projects that these would be pretty low on the pecking order as far as MnDOT's concerned. Doesn't mean that we can't try again. That 90-10 cost share is an incredible benefit to the city and to the airport.
Well, from an economic development perspective, we can look at, there's other types of economic grants that are a little more unique. But again, it would be, there's no necessarily committed fund in the budget. From a development of the airport and economic development, without that access or that ancillary parking, we're not finding those commercial users are as willing to do that because they don't have those ancillary supports.
I guess I would say, I mean, I hear you. I suspect that those two things don't really do anything to the general aviation hangars, right? It's all the commercial hangars that we want to see developed, true? And LifeLink, is currently in one, and there's some talk about maybe reconfiguring those commercial units to accommodate them. I guess I would be opposed to revisiting this in the future when they're ready to maybe take that next step. I mean, have they even unpacked their boxes yet? Have they moved in?
No, it's in the works right
Yeah.
now, and they already have expressed interest in potentially exploring an additional lot in addition to, so they're hangar one right now. They've got that first right of refusal on what we're calling, I think it's lot 47 is what it's labeled as. They're actually interested in exploring entering into agreement with the city, whether it's a lease, or another first right of refusal situation for the lot adjacent to that as well. So they're excited to be here and they're ready to go. They see a great potential and a great future here, but parking is a consideration. And the first right of refusal on lot 47, that's a temporary solution, right? They can use that temporarily to support their needs. Part of this might just be to see truly what their needs are over the next year as well.
Yeah, I wouldn't be opposed to revisiting this for that future development. Obviously, our general aviation hangars hangar lease owners could care less based on tonight's comments. But now, once those lots are planned out, and developed, I mean, our intention is to go, what is that, southeast, right? I mean, build out that other area down there, the general aviation. And I think if I recall from past conversations, those being so much closer to the runway were much more attractive. The MnDOT side, MnDOT aviation side, right, for matching dollars or grant dollars.
That's my understanding.
So. Yeah, I want to add this to the 27 budget. So.
I don't think we can.
Alright, if there's no other questions, that's all I got.
Thank you. Thank you.
Really quick, Mr. Mayor and council members, as we kind of referenced earlier, we have started some talks amongst staff about a potential special budget workshop coming up earlier in August, anticipation of Kelly's upcoming leave. Is there any appetite in the council to, instead of focusing our mid-August workshop on a second or another budget discussion, moving that up to the first week or two in August? As a standalone workshop?
Do you have a night in mind?
What needs to be kind of like, should I have it written down?
I can send out the nights when I send out, I will send out the budget presentation along with, the surveys. And then I will send out nights and get feedback.
I want to say we're looking at the 4th and the 11th or so.
The 4th is National Night Out, so that would be kind of busy.
You're right, that's a good call.
You don't want to spend your national night out at City Hall?
Not me necessarily. But we'll see.
I've committed to, personally on the 11th, I've got a commitment to Lake Center.
Okay.
That evening.
And we can certainly just plan for, our regular August workshop. I just have a feeling that Ellie won't be here with us at that time. But we can certainly work through it. Christina, our financial analyst, is going to be stepping in and working through the rest of this budget process once Ellie does go on leave. And she'll get us through preliminary levy. Her and I will be tag teaming that along with the Department of Support as well. And then Ellie potentially thinks she might be back for final. So we'll see.
Can't let Julian have all the fun.
Great, well, with nothing else coming forward, thanks everyone, good night, we're adjourned.
Yeah. Great job, Ellie. What was that? Very good.
I gave 2 more minutes, an hour.